Hi, everybody. Welcome to this Friday the 13th. I don't know if that's a good thing or bad thing. It is Friday the 13th edition of The Last Word, a Chrisman commentary, today sponsored by our friends at True. And we are missing one of our compadres. Brian is on a plane. We hope he's going to have some safe travels. And not in our agenda, but I think it's a good way to start off today. Kobe, tell me what your Valentine's plans are.
Oh, wow. Okay. Going right after it. We don't do Valentine's Day. We're not big Valentine's Day people. But we celebrate our love always, every day. But I can tell you my daughter last night was very busy putting together not only Valentine's Day cards for everyone in her 6th grade class, but she taped a fruit roll-up to each card because she wanted to give a thing of value with each sentiment, and she wrote personalized notes to each kid. So my daughter's Valentine's Day plans were very, very intense, and she's having a sleepover tonight with a bunch of girls, and they're gonna do their own thing and celebrate. So better question for her, but off to a good start so far.
I like it. I want to come back to that. KP, what are your Valentine's plans?
Yeah, in the works. I don't know. I'll probably scramble somewhere late in the day and find some flowers real quick, and maybe do a last minute dinner. I'm a real romantic. No, I was gonna do something, but we have a family calendar, and apparently some other kid, it's a boy who's a friend of ours. He has a dance recital, so apparently we're going to that. So I'm just like, all right, I guess we're not doing anything for Valentine's Day. So that's it.
Those are hugely romantic plans.
Yeah.
I'm so envious. I joke around with my husband that on Valentine's Day, I gave him a son. My son's birthday is Valentine's Day. And that year, he didn't give me any flowers. And he was like, well, we were in the hospital for 20 hours. I was like, yeah, but there's like flowers literally on the first floor. And he's like, yeah.
Oh, my God, yeah.
Didn't help. So that is kind of a running joke in our family. I don't get flowers on Valentine's Day, and we usually have a birthday party. But now that our son is in his late 20s, we get a little bit more freeing to do some stuff. So we are going to go to dinner and a show. Some friends were nice enough to give us some tickets to a theater. So it's going to be a ton of fun. But I want to go back to what Kobe said before we get into this week's news, because I think this is really, really relevant. Your daughter did something that every loan officer should be out there doing. She took cards. She made special handwritten notes. We won't talk about the thing of value. So maybe, we can't give out things of value, but we can.
That's the 6th grade RESPA violation. Yeah.
We can market ourselves. And everybody sends Christmas cards and everybody does certain holiday things. So show up, be different, do something on Valentine's Day and make it a little meaningful. Maybe if you know that
you're in Austin, send some Test Treats. You can Test Treats is now integrated in Total Expert. You can just fire off some cookies to all of your clients. It's their biggest week of the year of selling cookies. It's crazy. So,
by the way, their cookies are really good. If you like cookies, their cookies are really good.
They're amazing.
They're absolutely amazing. So do something. If it's not too late, you could still show up and put something together. Handwritten notes never, ever go out of style. Other things that never go out of style. Let's kick it off talking this week. KP, you do a good job of this out and about in the community. And it seems like we got a lot of predictions this week about what is going to happen in the market for the next year. So tell us the things that you heard.
Well, I apologize. I'm still on camera. There's a lot going on in my kitchen where I'm usually set up. So it's really noisy in there. So I'm hiding.
But he's definitely not cooking dinner for anyone.
No, not yet. That's tomorrow. That's tomorrow. So what I would say is, rates are in a good spot. And Christy, by the way, you're always really good at telling me where the 10-year's at in the moment. So you look it up while I talk. But what's crazy is we had I'm doing air quotes right now, but we had a bang up jobs report, right? 130,000 jobs. Oh my gosh, it's way above expectations. What's going on? and normally rates would shoot up and the 10-year treasury would go up. We'd be in the 430s and everyone's crying about rates. They went down. They went down to 410. So I don't know what it's at today, but it was like 411 when the market closed yesterday. But and then inflation came out today, and it was pretty cool. So, you know, I think the trend is your friend is the bottom line. I mean, you can't go out and say this economy is really good from a job perspective because of healthcare and social services, which are both government subsidy to the hilt, and education. And so, you know, white collar jobs are under attack, still losing jobs. People are starting to not believe the jobs report. Manufacturing jobs was up though. That was interesting. So, you know, maybe some of this capital expenditure from one big beautiful bill is kicking in. But rates are in a good spot. We're in a good spot, and you know, I can't predict the future, but we definitely don't see any Fed rate cuts in the future and in the near future. The markets are kind of saying maybe April, but we could have one of those years where just like each the last two, we didn't see any Fed rate cutting until all the way into September. Although we do get a new Fed chair with Kevin Warsh in May. So, you know, all in all, like this is what a soft landing looks like. We haven't been in a recession. People have been crying about recession and crying about credit card debt and crying about delinquencies and crying about I mean, the negativity out there, and I get it. Like, yes, there are people hurting. By the way, there's always people hurting, but there's 163 million people working. And, you know, home prices are appreciating a little bit less slowly than the past couple of years. And wage growth is still outpacing that home price inflation. So what I would say, my takeaway from the economic summit was, you know, just to kind of put a button on this, you know, we're in a good spot. It's a good time to buy a house. I mean, if you're a buyer, it's a great time to buy a house, and that's really good news for a lot of our origination teams and realtor teams. So we just got to get the word out.
Well, you definitely heard Barry say that from the stage. By the way, the 10-year is at 4.062, down from 4.063 when I first pulled it up to answer your question. So slight move even while we're talking. So KP talks, the 10-year moves. And Barry was very specific in, hey, rates are probably going to go down at some point during the year. His prediction is they're going to be a little bit lower. He shared predictions from a lot of different folks, but there was no like, hey, we're going to get to 4%. Now is a good time to go buy a house, because when rates drop, prices are going to go up. There's less competition. We're seeing price cuts. And that sentiment was kind of echoed throughout the day. The other thing that my takeaways were that there was a lot of optimism about what the market's going to look like this year, even though the expectation is still that it's going to be semi-flat or trade in a small range, that there's improvement coming. Kobe, what are you hearing out on the street?
Yeah, you know, I kind of echo a lot of what KP was talking about in terms of taking a look back at this week. I don't remember a week where I felt more conflicted by different data points that I saw. You know, we had the jobs report. The reaction to it was a mixed bag. The revisions that took place or that happened that revised the data from the last 2 years, pretty significant. I think that's the reason why the reaction to the 130,000 jobs was a mixed bag and why the 10-year yield went down. We also saw rising delinquencies happening across the board, although still not a moment for an alarm to sound, but they are rising in terms of the December report that came out. We also had what was the other report that came out that it was the percentage of income versus the payment that came down from 34% to 27%. That number, you know, was positive, right? It's showing that we are seeing a little bit of and again, it was in some markets and not others. So even that was still with a grain of salt. So a lot of grains of salt this week. I would call it a very salty week in terms of the economic data that we saw and markets' reaction to it. You know, I think that there's a ton of reason to be optimistic because there is indications of the soft landing, as KP said. So we're not seeing anything that's alarming in terms of, are we heading towards a recession or off the cliff? We also saw CPI came out today, and it didn't come out as poorly as some expected it to come out. I would love to see what the PCE looks like, and I'd like to hear KP's take on that. And then I think a lot of it is going to depend on consumer confidence going forward. If it's really a soft market and we don't have confident buyers, then that purchase market that we're hoping for, even if rates do continue to go lower, might not materialize the way we're hoping it will. So that's kind of my gut reaction to this past week, which is a lot of uncertainty around a lot of mixed data points.
I think you're dead on with the consumer sentiment, and it's going to have a bigger impact on the market this year than it maybe has in the past. And you brought up delinquencies. So if you were interested in a slightly deeper dive on delinquencies, go back and watch the Now Next Later from earlier this week. Wendy Lee was the guest with Sasha and Jeremy, and she did a good job talking about some of that data that has come out and kind of the impacts and things. So go back and watch it. It's posted on the YouTube channel, and you can see that. There was other big news this week. So Kevin popped on and popped off. So I'm going to go, Kobe, back to you to start. What other news caught your attention this week that folks on this call might want to know about?
Yeah,
Sorry, this is the reason
couple-
I popped on and popped off. This dog was just yelping so loud.
Oh,
The puppy that's untrained. I apologize for cutting you off there, Kobe, but this dog was yelling so loud in the background. I was like,
that's
I
okay.
don't go grab her. If I don't go grab her.
I can't be mad at getting cut off for that. What's
it's going
the
to
dog's name again?
spike our ratings.
Yeah.
People like puppies.
What is the puppy's name again?
That's
I know
right.
you told me a few weeks ago.
This is Lily. This is Lily, our new mini golden doodle. Say hi. Sorry. I know we
Very
have a lot
cute.
to talk about. We talk about
Yeah.
Lily.
No, we should definitely be talking about Lily. So big news this week, and I know KP will want to weigh in on this as well. We saw the PennyMac and Cenlar, the acquisition, PennyMac buying Cenlar as the subservicers assets. There's a lot to unpack there because of the amount within the subservicing portfolio that can move off as a result of the sale. So there's some stuff to unpack there. I think Wells dumping $40 billion in MSR, super interesting as well, just because of their $960+ billion portfolio. They seem to be wanting to slice off little chunks of it as they continue to divest. I think that has further implications for what the banks versus the super servicers, I'll call them, the different paths that they're on. When you think about how the super servicers, like, now call them PennyMac and Lakeview and Mr. Cooper, are not subject to the Basel III, but the big banks are, and what that means for their assets. So I think there's some pretty big implications for both consolidation between what's happening in servicing, and then those servicing arms all having origination arms as well, some sort of retail lending operation as well. And then I think it's also important to talk about what it means that we're really seeing the big banks, and we've seen this over the last 10, 12 years, but the big banks really seem to be ceding the entire space. And if you look at the recent IMB report from the CHLA, that's who they're ceding it to. They're ceding that space to the IMBs. So I think both of those are big stories to talk about in mortgage, and that's two of the things that caught my eye more than anything else this week.
Well, it also caught the eye of regulators. And there was a couple of articles that came out this week just talking about, hey, we're really going to be taking a look at some of these larger IMBs and safety and soundness, which is something we've heard multiple times, right, throughout the years. But it seems that there's a renewed interest with the events of the week.
I'll chime in. I obviously like the acquisition by PennyMac. They're a great company, and we're very close to their leadership team. Here at MG, we personally use Cenlar as our subservicer. We don't have a huge portfolio. It's not like you can buy someone else's subservice business and then stick your retention team on it. So I like, that's kind of like, you're basically saying, if PennyMac did that, they basically, they would lose all that book, right? So then what's the point of the acquisition? So I've read like some grumblings about that, but I don't think that's the play. But Cenlar uses MSP, which is still pretty dominant market share of software by servicers everywhere, and it is an ICE owned product now. And so like, there's probably a data play there. Maybe bringing in a larger, more experienced subservicing team, because as you guys know, PennyMac in their lawsuit with Black Knight, they won retention of their intellectual property, and so they've been working to build their ability to service, and so you really get a lot of good people that come over from Sinlar. I have a property that's serviced by Sinlar. I really love the portal. I think it's great. So it's I've got, you guys know I'm pushing 50 and I'm pro housing. I've been amassing my own personal properties. I say that tongue in cheek. I'm just a little guy, but I use a lot of different servicing portals out there. It's my favorite one. They reskinned it a couple years ago, and I also really like David Schneider. He's a good operator. He's been in the business a while, Stearns and other places, and he and I trade texts every now and then. Just a good dude. I also like in the last year, Sinlar's really gone out in the space, and they have like a customer conference, like a summit, and they're out there and they're visible. They just do a good job. I believe Matt Detweiler is probably the face you see a lot out on the road shows. So they just do a good job. And so I think PennyMac is trying to be real serious about getting in the servicing space, and they've acquired a really good team. And I know Sinlar took some heat during COVID. Being a servicer is a tough gig. When everything's fine, everyone makes their payments, you make like this much. And then when everything goes to hell, like in the pandemic, it's like, oh my God, we have to default service every loan on the planet because they all get forbearance. This is really hard. And but I think they work through all that. So, but there's a lot of great subservicers out there. We've talked to a bunch of them in the space, and it's a little different than Rocket acquiring Mr. Cooper, because Mr. Cooper, is a correspondent that has retention team on their book, and now Rocket can combine those things. This seems more of a servicing capability play more than I'm buying a book retention play to me. So I think it's great. 175 million plus another 95 million over 3 years, hitting certain metrics. Pretty big news. But your point, Kobe, about Wells, I thought was interesting. I ran to a gentleman in Dallas on Tuesday. When they were in the space and buying correspondent and also offering warehouse lines, they were a great player. I mean, they were a great partner to us. We still bank with them. We keep a lot of our treasury management with them. So, are these all signs that things are good, or is it consolidation showing that things are cramming down and margins are getting thin and everyone's trying to get a revenue stream from here, there, and the other? It's probably a little bit of both. Yeah,
I would agree with that. I think if you think about also the MSR play right now, it's a good time to be trading MSRs or selling off, right? You've got all these, from 2020 to 2022, you've got some portfolio that is never going to be paid off, or is going to be the slowest to be paid off just because of where those rates are. So that's going to be a performing asset for a long time. So it's a good time for them to be doing that. So I think there is at some point a good time to be a servicer. And I think now more than ever, a really good time to be a servicer if you've got attached. And we've seen a lot of the consolidation happening around those companies that do have the distributed retail arm that can go out and recapture some of that volume. So if you do lose it because rates fall, now you've got the origination arm to go get that. Not a great message if you're trying to get sub-servicing from a lender, but it's the right play, right, to try to capture that funnel.
I think that $40 billion pool that sold for over a 5 multiple against the servicing value. Yeah. So, I mean, that was, that's still a great price, right? So, if you strat out the different interest rate buckets, right? Here's my non-graphic version of doing this, but like 3% are paying off like this, 4%'s a little more, 5%'s a little more. And so existing homes with 5% under rates are unlocking. They unlock slowly. And I'll say this till I die at my desk, but they will sell their house and they will refi and they will trade up. Over time, no matter what your rate is, you build this much equity. At some point, when the 7 Ds hit you, deployment, diamonds, diapers, debt, divorce, downsize, death, you want to sell the house and trade all that equity into the next house. And rates keep converging down to a point to make maybe the payment, is equal, and so or attainable. And you know what? No one's talking about insurance anymore. I'll be, with California MBA. We're up in Sacramento, the first Tuesday of March. We're up there lobbying. We're going to talk a lot about insurance. But, you catch a break with decent weather in the year, insurance doesn't go up as much. It kind of stays flat, while wages still grow. And so,
we actually saw insurance retreat a little bit in terms of growth over the past year. That just came out today.
When you're also seeing a change in taxes, right? Everybody's realizing that taxes have a huge impact on affordability. So look at the states and look at what they're trying to do for primary residence homeowners. And it seems like many states are now jumping into that bandwagon of how do we do a better job of helping people stay in their homes. It can't just be taxes go up and up and up and up and up. And
there's an unintended consequence of that, though, Christy. And Kevin and I can tell you both about that living in California. That's called Prop 13. And that's where people are disincentivized to sell their home because their property taxes can't go up. So that actually can have an unintended consequence when the government gets involved of choking off the supply. So there's some ramifications to that. And a market like Texas, where you have high property taxes and low income taxes, there's actually better turnover of real estate than there are in the state that Kevin and I are in.
Yeah, but you look at like what Florida's trying to do. They're trying to eliminate property taxes for primary residents. So it's zero, and it would be zero if you sold it and went to another one. And again, who knows how that the functionality of all that working, but there are solutions that aren't what you have in California, because you're right, it does have some stifling effect on the market and your ability to sell and relocate. So what are some good solutions? At least there's a conversation that's happening around this and a recognition that you can't just continue to increase property taxes exponentially because people cannot afford it.
And portability of taxes is always a thing. Certain states have certain rules that you can take your tax basis with you, or maybe give it to your kids. And then that went away, I believe, in California. They snuck that one into the bill. And yeah, every state for themselves, right? Not just in regulation, but also in how they manage their business. And in Florida's, decently run business. California is one of the worst. We just run a deficit all the time because we spend money on stupid stuff like, trains that never get built, or healthcare for, tens of millions of people that, crush the system. And I'm not saying people shouldn't have healthcare, but it's a big cost. And so it hammers the budget. So every state for themselves when it comes to running their business, and taxes is certainly a big part of that. I mean, 7 years in June, I'll have owned a 100% electric vehicle. I can no longer drive in the HOV lane. So my family got me an HOV buddy in the backseat of my car for Christmas. It was nice. Everyone's creeped out when they see it. And they're proposing.
I'm creeped out hearing about it.
Yeah. I'm sure as long as law enforcement, it doesn't hear. But so the state is now considering taxing people for using the roads based on mileage. Whereas, because there's so many electric vehicles in California, people aren't going to the gas pump and paying the taxes for the road infrastructure. So the state's like, okay, I'm going to tax people for the miles they use. Like I don't even know how you do that. It's being kicked around right now. It's not passed, but so every state's trying to run their business in different ways.
KP, are you saying you're not excited for the high-speed rail between Modesto and Bakersfield?
I mean, the PF Chang's in Bakersfield is always a go-to when I'm up there, but it's like how much we're just so the federal government is the worst. I mean, at least Doge tried to do something about it, but like we're just so dumb at the government level on so many levels. We just waste hundreds of billions of dollars.
Yeah.
I watched this podcast with Elon Musk, and he was having a couple pints of Guinness, if you got Guinness in there right there, Kobe, splitting the G. He's having a couple Guinnesses with, these two guys that founded Stripe. And he was talking, he's like, there's at least $500 billion of fraud, waste, and abuse at the federal level. He thinks as high as $750 billion, right? Of our money. That's our money. going. I'm a schlep with a W-2 wage. I got to pay taxes, and in this state, I pay a lot. So, I don't like seeing it go to just stupid stuff, And so, this state again is so bad at it. I mean, it's. I'll just hush because it starts to test my emotional intelligence, and being able to to not just basically say that taxation is theft, outright. But I get it. We need taxes, and we do have to support the welfare programs, and there are people that need it. But man, people abuse it. These empty buildings with empty daycares and empty education and empty everything, in states across our country where we just waste literally tens of billions. It's over $100 billion, and you add it all up. It's just fraud. I mean, they're stealing our money. They're just stealing our money, And so it's like, and so we always talk about home affordability, and there's all this money out there that could be going to things like lower the G fee, don't raise the VA funding fee. We have $189 billion in the MI fund for FHA. Lower the MI, get rid of the life, the for life MI product. Get rid of LLPAs, especially on a refinance. I mean, what are they doing with our money? We talk about housing affordability, and MBA is banging that drum. And by the way, I'm connected to a lot of lobbying groups in this industry, and they all do fantastic work. Bob Brooksmith was on the Hill this week. Like Bob Brooksmith from the MBA is testifying and talking on the record, in a committee, in a House Financial Services Committee, talking about housing affordability in the secondary market. And he's the only one I see from any group out there in DC in front of, our elected officials. And we have a lot of work to do. But having said that, man, they're actually passing bills up there in DC. So must be an election year.
Well, having said that, register
what do we
for advocacy, right? Like, can you go register for advocacy? It's coming up in April. Now is a good time to register and do your part to support. Make a donation to Ma, to MORPAC, to your favorite housing supported PAC, whatever that looks like. I don't know if I'm allowed to say that.
All of them. They're all good. They all do work. Broker Action Coalition, CHLA, NAM, they all do great work, and I mean, obviously MBA is probably the most entrenched up there, but and then at the state level, CMBA, Texas has a great organization. New Jersey, there's so many good ones. Just sprinkle it around and have some people advocate on our behalf. Good call out.
All right, Kobe. The last word to you. We've got 2 minutes to wrap up. We'll let you wrap up our time together today. Again, sponsored by True. We appreciate their partnership. We appreciate the work that they do in the industry. Give them a look if you don't already do business with them. And Kobe, I'll let you take us home.
Yeah, so an interesting week, a lot of data still to come, a lot more to unpack as we continue to see the industry evolve, consolidate, big players coming in, other players starting to plot their exit from our space entirely. I think this is the year where we're going to see the brokers pick up more market share, the IMBs pick up a little bit more market share. I'm excited for what I think is going to be a mildly robust spring housing market. I don't think we're going to see, it go bonkers, but I think we're going to see an improved housing market this year over last year. I think the numbers are going to look good come March and April. The weather helping that as well. We saw the housing bill come out of Congress this week. I'm not sure we haven't talked about that, but I have mixed emotions about that too. So a lot of mixed emotions coming out of this week, but overall a lot of optimism. I think people are looking forward to rates continuing to be cooperative, perhaps even get into the 5s in the next few weeks. And if we see that, that's going to unlock, another 250,000 of buyers according to the numbers. So, a lot of reasons to look ahead and look to the future and be optimistic about it.
Great way to wrap up. Everybody go out, grab your flowers, make a reservation, hug somebody, tell them you love them, wish them a happy Valentine's Day, and we will see you back next week.
All right.